Hey, Chris, how are you doing this morning?
Grant, great to see you. What kind of exciting things do we have in mind for today?
We got some really cool stuff we're going to talk about. And this is what I've been hearing across, even in the USVI St. Croix, which I was there all last week. And now I'm sitting in my other office here in Omaha, Nebraska, and the same conversation was taking place. That's around cryptocurrencies. A lot of people are involved in crypto. They're very interested in cryptocurrencies. They're looking at different coin structures. And we see not only is that happening at the everyday dinner table that's taking place in America, but also at the highest levels, and you see it happening in the White House itself. We want to bring the conversation to you as the financial IT guru. I mean, this has got to be in right in your wheelhouse when it comes to cryptocurrencies, especially during this current second Trump administration. And here's my question I want to give. We want to jump right in, get you started, right? Get your coffee out, right? So here's where I want to start, and it's about regulatory, reboot. Especially during this administration and the cryptocurrency regulation. Now, will we see an increased freedom for innovation, or more of a clampdown under the guise of national security and financial stability? What are you thinking?
Well, Grant, great to see you. I'm glad that you're back from your time down in the U.S. Virgin Islands. I hope it was very impactful in everything that we're talking about. But to get right to your questions, and look, crypto is one of my favorite topics. I got involved in crypto in 2013, when I was very active in the banking community and saw that this was potentially another avenue that banking should really be paying attention to. And I was one of the first speakers at the events talking about it. And I will say, every bank wanted to hear about it. None of the banks wanted to do anything or could do anything. And it comes right back to what you talked about, which is regulation. Without firm, clear, concise regulations across the board coming from whether it's the Fed or the SEC or any of the other alphabets like the OCC agencies, without those kind of regulatory things, the banks can't move, right? They just can't, even they want to. Look, in 2016 in April, Citibank announced Citicoin. Okay. Now, clearly they have the money to provide the liquidity for a cryptocurrency. Clearly they've got the distribution network to be able to distribute a cryptocurrency throughout, really globally, if you think about it. And clearly they have the IT department and the business knowledge to be able to successfully do something. What people don't understand about a lot of the big banks is that their IT departments are bigger than Microsoft, bigger than IBM, bigger than Apple. These banks are just really big fintech companies when you break them right down. So yes, of course, Citibank could have done that, and they could have done it probably as well as anybody, if not better. What stopped them? What stopped them was the fact that there wasn't regulation in place, and the risk for them is to take a chance and do something and find out that it goes against whatever regulations come up. First of all, it's a risk to the bank. It could be a fines to the bank. But the thing that CEOs of banks worry about the most is reputational risk, right? And if that hurt the reputation, the branding of Citibank, this is for them the worst thing that would happen. So, of course, they didn't do anything. Neither did any other bank that's out there. And this is why. Now, you talked about Trump 2.0. We could be very much right at the beginning and the onset of an opening up of all this, where there is the talk right now of clear regulation in crypto, where there's the talk of enforcement. In fact, we just had the signing by Trump of a bill that dissolved the crypto enforcement unit, right?
Yeah.
Which is really an inhibitor of crypto. And really, they were out there looking to see, what might be against the rules or not. So really one important step. And if my feeling is if they can get that step done so quickly, I mean, he's still not in office even 100 days yet. It's coming up, right? If we can get that done quickly, then I've got to feel optimistic about getting some of the other things done. And I'd like to talk about a couple of those other things.
Man, we got a lot to unpack today. We're going to go a full hour at Verve. So I tell everybody, strap yourself in, because this is a major shift in our financial systems. And I want to let people know, back up sometimes, a little back in time, how we even got to where we are. And I'm saying, like, in the very end of the 1990s and the very beginning of the 2000s, as we get into the internet age, and what gave the internet legitimacy from an e-commerce standpoint. I remember when, you were on your little modem, you get your and then people say, well, put on your credit card and we can do banking. And we're like, are you nuts? Like, nobody would do that, because what you said earlier, there was no regulation. If you lost your money, you pretty much were lost. But when the banking system more or less supported it and it became a legitimate form of banking, digital currency really was kind of, I think, born at that time, because you weren't exchanging dollars, you weren't using paper checks, you were there using, usually your credit card, or then you started seeing things like PayPal. Hey, how did Elon Musk get all this money? Well, guess what? He was starting to get into digital currency, in its infancy 20 years ago. Here we now fast forward to today. To your point, the blockchain is the new internet, the internet of finance, put it like that. Now, you had to make sure that it was sustainable. Can it support a worldwide banking system? I don't know. I think the jury's still out for me on that, because people don't realize how it works. You're taking electricity, right? And then converted it and utilizing it on a digital platform we call the blockchain. It takes a lot of electricity to do that, and I'm not sure if it can do that. We'll see. But what we're talking about now is a shift this regulatory body, and then you've got governments that are getting involved, and then you've got government officials or their family members say, hey, I want a coin. I'm minting a coin. That's like minting money. So we're saying, like, any person could just mint their own money, and then it has value, and that we can use it as goods in exchange, and that there's a ledger, which is the blockchain is a ledger, and that it's a real value that can be utilized in stocks and bonds and real estate and insurance and things like that. Wow. I mean, that's a big wow. You see where I'm going with this, Chris? This is a major shift in how we do business. What's your take on that?
Well, Grant, I mean, you hit me like a dozen things there, all good. So I'm going to try to pick apart a few little things, but I want to go back to one thing you said in the opening, which is about innovation. And does this open up innovation or restrict innovation? I would put forth the theory that innovation happens regardless of regulatory or not regulatory. It's, people are innovative. We're creative, by human nature. We will come up with new ideas. Now, whether they're legal or not is a different question. Okay. And let's face it, there's been a lot of illegal good ideas. If you're a criminal, it doesn't mean that should be legal, right? But back to what you said, 100%. One of the other things I just want to hit real quick is that, yes, the game changer here was the blockchain, okay? Because you're right, 20 years ago, maybe a little more, we've had digital currency. So in other words, we're able to buy and sell things without physically using a paper check, or more important, currency itself, whether it's dollars, euros, or pounds, right? That's not cryptocurrency. That's digital currency, right? The game changer on where crypto came in was the blockchain, because now you could cryptographically secure that currency, that digital currency, let's say, into a cryptocurrency. And one of the biggest problems it solved was what we call the double payment problem, where potentially somebody could use the same payment for two different transactions, right? And that's a big problem that was solved there, because on the blockchain, look, in its smallest form, if we boil it down, the blockchain is just the most secure database we have today. Okay, that's its essence right there. It stores information in a way that cannot be hacked at this point, right? So that's what the game changer was. Now, you also touched upon the energy consumption, okay? And I would put forth that this is not a blockchain problem or a technology problem. This is an inefficiency on power. And as we go, we're going to find that we've already gotten over the decades more efficient on power. Right now, you have electric cars, right? So there will be advances that will reduce that, consumption issue. Okay, and let's face it, this world today is not going away from electricity.
Oh no! Okay? And Chris, we're gonna stop just 1 second, because we gotta go to break, because you got a lot to unpack, and we're gonna unpack more of that after we come back from our break, because you're saying a lot, and we gotta jump right in on this. So hold that thought.
Wow, Grant, break.
Follow the Brand TV broadcast host, Grant McGaugh, as he visits with top executives and entrepreneurs to find out their secrets of success with their personal brand. Follow the Brand TV broadcast host as he focuses on brand development to build better relationships, bring value to your business, relationships, and career. You will enjoy listening to each episode that is tailored to speak to you directly. If you're looking for this type of clarity in terms of building your brand, you have tuned into the right station. Each episode will help you to shape a conversation in the 5-star BDM network of 20,000 professionals and become a springboard for your corporate engagement and business opportunities. Each guest will frame their story in the areas of personal branding, business development, career development, financial empowerment, and technology innovation. Grant McGaugh explains why he is the CEO and owner of his own professional career. Grant is an accomplished business leader and entrepreneur who wants to give back to individuals to grow their personal brand strategy. Tune in as he weaves his story about new possibilities, while to you exceed expectations. If you love storytelling, this show will make for fun.
TravelShare. It Marketplace is an innovative, dynamic, user-friendly, and fully comprehensive global travel marketplace, featuring all Caribbean islands as a premier destinations. TravelShare. It Marketplace featured daily travel news, arts, culture, events, travel weather news, individuals' remote work, flex time, paid time off, family leisure time, and travel deals to better connect the U.S., Caribbean, and the Americas worldwide. So no matter where you want to travel in the world for work or leisure, working remotely or on vacation by yourself, with friends or family, whether by air or sea, TravelShare. It Marketplace makes it easy to get you to your destination. Book now at www.travelshareit.com.
The big picture. We are back on the big picture. Going to have my partner in crime come back and join us, because this is important. This discussion we're having is so important. So, Chris, we were just unpacking first about, just the technology itself, the blockchain, but going back, even comparing it to e-commerce, and then bringing it full circle, because people don't realize that the blockchain is powered by data centers that are strung all across the world, and they have to be operated in a certain way. And then if you mint a coin, it takes a lot of power. And certain countries say, hey, they're shutting down the power. Like, hey, you can't do that. Some of them say you can't do that. I don't know what that's going to look like on a worldwide scale. But then we start getting into the regulatory body. So, Chris, continue on your discussion.
Great, Grant. Well, let's go on to the regulatory a little bit, okay? And I can tell you one thing that's been kind of a mystery to me when we talk about the current lack of regulation, but there is some framework that is out there that's been used in the U.S., okay? And it also comes to one of the things that this administration is considering, which is to remove the taxation that's on cryptocurrency, okay? And if people that are not familiar will I'll explain really quick. Today, if you have cryptocurrency, it's considered as a commodity by the IRS, which means that you pay capital gains tax. And what that means is if you buy $100 worth of cryptocurrency and it goes up to 150, your value goes up to 150, you pay 30% on that $50 of profit. Okay, that's the taxation. That's how the IRS works in the stock market, with bonds, with anything that's considered a commodity is capital gains tax. Now, what's interesting with the U.S. government when it comes to crypto is that the IRS's position is it's a commodity and it's taxable as capital gains. Okay, but the Justice Department now has had a whole bunch of high-profile cases going back 5 or 6 years now on money laundering and the criminal element using cryptocurrency to accelerate their money laundering. Okay, so the Justice Department has successfully prosecuted individuals for money laundering based on their use of cryptocurrency. And in the judge's decision, and I'll go back to one of the very first cases, the judge says that Bitcoin in this case, which was what the Justice Department accused this individual of using for money laundering, that Bitcoin acts like, behaves like, and is used like a currency. And because it's a currency, it's money laundering. Okay, so now let's look at the impact of those two things. You have the IRS saying it's a commodity and I'm taxing you, and you have the Justice Department saying it's a currency and I'm jailing you. Okay, so it can't be both. Right? Like, for instance, today, if I use the British pound in money laundering, right, I get convicted, I go to jail. But if I buy the British pound and it goes up in value, it's a currency. IRS does not consider it a commodity. There is no capital gains tax. So right now, the government is having it both ways.
Slippery slope.
Yeah, and I can't understand why this hasn't hit court yet somewhere. Now,
I think it will. What you're saying is that it's not new, but it's the use of it is becoming more of a commodity. Let me say it like that. A lot of people are starting, like right now in the US, let's say you go into a grocery store or even a gas station, right? And you see this ATM machine that's there, and it'll ask you, do you want this, to dispense in money? Well, in certain other areas, like, in the Caribbean, you go into that same gas station, that same ATM, it's asking if you want it in Bitcoin. Do you want it in crypto? And it's just, it's starting to become more commonplace. A lot of people don't even realize, like, cell phone use was way more prolific in other countries before it became more prolific in the United States, especially with texting and things like that. We're kind of a laggard with that. We have to understand that this use of currency, I'm not even going to call it a commodity. I'm going to call it what it is. It's a
commodity and currency are two different things.
Yeah.
Right?
Yeah.
And your use of commodity as something that's commonplace is understandable. But a commodity, for instance, stocks and bonds are commodities. You can't go to the supermarket and buy a gallon of milk with it. But cryptocurrency today, you can. You could have a Coinbase account and get a Coinbase debit card, which attaches right to, say, your Bitcoin account, and you can go to the grocery and you can pay with that. And yes, the grocery store is getting the local currency, but Coinbase is converting your crypto into that local currency. So it's a currency in that usage.
Yeah. People we have to get, it's almost like we all have to go back to school. When we first learned about, dollars and cents, let's just say, from my American world, and realize what the digital currency is really about. And that when you hear people sitting there talking about, I'm going to mint my own coin and sell my own, my own crypto. You're like, how can you do that? You can't. That to me sounds illegal. Like you said, if I go to the basement and I start printing dollars, I think I'm gonna get in trouble.
Well, you printing dollars is counterfeiting, federal offense. Yeah, you're in trouble. Okay, but here's the difference, and I kind of liken it to the stock market, right? So you go in the stock market, you have your blue chips, right? But then there's what is called the pink sheets. Okay, and these are penny stocks, right? These are a lot of, no one knows who they
Wolf
are.
of Wall Street, the pink sheets. Everybody remember that?
Yep. Good example, right? And in fact, there are law firms that specialize in shell companies, which are already listed on the pink sheets, and you can take a legitimate company, back it in, and now let the market make you money, right? So in effect, printing money, right? I liken the pink sheets to what's going on with a lot of these, what we call altcoins or meme coins, right? And look, the value is what somebody will pay for it. And if thousands of people will buy it, then supply and demand, then the price will increase and there's a profit to be made. I have a hard time really considering them the same. They're a deviation of the crypto animal that is actually the majors that actually can be used for buying and selling and has some support on its value. I mean, you look at some of the book values on some of the top 10 crypto countries in the billions, right? So there is a broad support, let's say, for that. And we're still talking about, I don't know, is it between 5 and 10% of the population is dabbling in cryptocurrency? It's probably, maybe I'm even high on that. I don't know.
From the conversation, I think people are getting wind of it, because this is a game changer. We can level the playing field when it comes to economies of scale. And what does that look like? Now, we got a few minutes because we got to unpack this elephant in the room. So if you are the regulatory body, as you just stated, and then now you're also running a major economy, aka the Trump administration, and you still have family members that are like they, what, I'm going to make a coin. I think you yourself, the main body, I'm not going to say names. I'm just going to say this. Just look at the implications that you're creating a coin, and that you control some of the levers of how these regulatory bodies are operating. And you just said, hey, right now we're getting a 30% tax on capital gains. Let's get rid of that and change the rules around it. I don't think people realize about, CBDC, or the central bank digital currencies, versus, crypto freedom. Help us understand, is that a conflict of interest? It isn't. Maybe, I don't know. I mean, what's your take on this world?
Well, Grant, I think, let's take our break and let's come back from that. And I want to dive right into that one.
Okay, because that's a big, thick one, right?
Yeah.
For thousands of years, humans have searched for better and faster ways to trade with one another across the globe as a way to improve our world. And in that time, the principles of commerce have remained the same: to finance transactions, to mitigate risk, and to connect buyers and sellers. But what has changed is that the world has gotten smaller. Barriers to entry are declining, and technology is bringing the world forward into a new economy. Throughout it all, Exim remains a constant partner. We're here to guide and support you through this new frontier of trade, empowering U.S. businesses to export safely and confidently. In fulfilling our mission, we'll help you navigate and overcome new challenges successfully. Together, we'll help make this world better. Whatever the future holds, no matter where we go or how we get there, Exim will be along for the ride.
All right, all right, all right. So everybody salivating, everybody got their popcorn out. We got to talk to Chris because Chris, you bring us the heat.
Well, I'll tell you, Grant, we left off at really some interesting stuff, and I'm going to try to take pack by pack. And the first one I want to really go to is you brought up a really good point in if people in the government or related to people in the government are issuing their own mem coins, right? You know, when it comes to regulation, is there a conflict? Okay, the first thing I'll say is anytime you're talking about celebrities or, you know, the politicians, these things, you know, there's a certain amount of being famous or even in some cases infamous, right? Yeah. And people are driven to that. So some of them issuing these mem coins, I liken to taking 1,000 pictures of themselves, signing them all, and then selling them for $10 each, right? It's the same kind of thing. If there's a market and there's a demand for it, okay, people, you know, who are attracted to that are going to be doing that, right? But if we come back to the regulation itself, there's that influence is not what should change the regulation. What should change the regulation, number one, is the fact that the U.S. government is speaking out of both sides of its mouth, right? You know, and I'll just reiterate again. I know I said it already, but if you hold cryptocurrency and use cryptocurrency, you're subject to the IRS classification of commodity, which means capital gains tax. If you use cryptocurrency in the illegal world and you break laws with it, the Justice Department is rightly coming after you and saying you've broken the law and you're going to jail. That's the discrepancy. You can't have it both ways. And today the government does. The other thing is, think about the enforcement, Grant, right? So if I'm the IRS, and right now it's more or less voluntarily that you declare your cryptocurrency and you declare the profit, and then it's the capital gains taxes on that profit. But if you think about the enforcement, right? If I go to Starbucks and I buy a cup of coffee for $5 and I use my, again, Coinbase debit card, so it's taking from my Bitcoin, right? That $5 transaction, somebody would actually behind the scenes have to calculate how much of the cryptocurrency that I bought and how much of that cryptocurrency was profit, and then the 30% capital gains tax will go into profit. Now, think about every transaction goes on from $1 up to millions, right? That enforcement is impossible. It's not even sensible to consider. But today, that's actually what the IRS is saying. That when you spend your cryptocurrency, the profit you've made on that currency is taxable in capital gains. So it has to change for those reasons.
Well, it's got to change. I mean, right now, the U.S. Department of Justice, they have quietly disbanded the National Cryptocurrency Enforcement Team. The NCET, has now been disbanded. This is a major pivot in federal crypto policy. I want you to help the audience understand why this is such a major change, that this is more than just a policy change. It's a signal, like a signal flare to the future of digital finance in America. And are we paying attention to this and what's behind the headlines? Help us unpack that a little bit.
Well, Grant, I find it really interesting is that the current administration has made, like most administrations, made promises of what they're going to do. So far, particularly in the crypto space, they've executed the steps that they had originally predicted, right? And I'll go back to day one. Okay, one of the first day one statements that the administration made, that Trump that ex-President Trump at the time made at the Bitcoin conference in Nashville, Tennessee last September, was those things, was to remove the enforcement, or what he considered the legal restraints on innovation put on by past administrations. The other thing is that there's a young fella named Ross who started a platform called the Silk Road, right, which is in what we call the dark web. And that Silk Road platform is almost like an eBay at the time, but there was buying and selling of everything, anything, including drugs, contract murder, weapons. And the administration at that time persecuted him and put him in jail. He was in jail 11 years. And it's kind of a hard thing to say, because I think at the time it might have impacted some innovation, because people were afraid of what we can do, because he didn't make any money from the drugs. He didn't make any money from illegal arms sales or anything, but he built the platform. Okay. So one of the things that Trump said at the Bitcoin conference at that time is that he would release him, and almost the first or second day he did sign the release, and Ross is out of jail now because of that, right? So if we look now at some of the other things that were said at the time, and I'll also want to mention that in May, the end of May, the Bitcoin conference will be in Las Vegas. I will be attending. I will give you the brightest and best news from that. We're expecting, I think, 25 to 30,000 people attending there. Vegas, maybe it'll be more because it's Vegas, right? But so some of the other things was to get rid of this enforcement, was also to get rid of the tax that was applied by the IRS in classifying cryptocurrency as a commodity, right? Along with a few other things. The promise of regulation that would help encourage the innovation that has come out of this market over the years. So these are kind of things that we're looking forward to and looking ahead to. I think that there's a lot of people that will be pleased that the IRS is taken out of the crypto picture in general. Now, it's interesting to me also is, can we classify some cryptos as currency, and some, as you, Grant, suggested, some of these meme coins, which people are just using to make money with, maybe you classify that a little differently. I don't know. I don't know if you can break these things up, or you need to use the broad brush. But either way, I think anytime we can reduce our visibility of the IRS, it's a good thing.
And this is the agreed upon statement. We just, April 15th, yesterday, a lot of people closed on their taxes, sent everything in. I've noticed, and a lot of people started to notice, that there are crypto questions, on there. I didn't know it was more or less the honor system around it. Yeah. And it's like, well, tell us that, you made X amount of money so we can tax you more on it, so it's just like, well, yeah, sure, I will tell you that. Like, I don't know. Good luck with that one.
Yeah.
But here's the deal. Here's the real deal. Now, you're sitting there in St. Croix, Virgin Islands. You talked about CARICOM. I think we were talking about this prior to coming on, and understanding that the musical chairs is on full effect. People are trying to figure out, well, what do I do with money? And my understanding, money has value because it's backed up by the U.S. Treasury saying, hey, it's worth X amount. And then that's agreed upon throughout all these other countries. And that's how they come out with, if it's worth more or less on an everyday basis. They've agreed upon, this particular goods, value, services, products are worth X amount. When it comes to cryptocurrencies, that's still in flux right now. What is it worth? Is it worth this? Is it worth that? How do you look at it? Like you were saying before, is it a commodity or is it a currency? Well, this is moving so fast now, and if the regulations don't keep up, they become legacy and woefully behind. We had talked about that maybe in the CARICOM space because of how those laws were created, and they were created at a time that cryptocurrencies weren't really a thing, and now it's a thing. How's that going to impact the economies of scale in the Caribbean?
Well, Grant, it's definitely a thing, and you're right about that. And just to speak to regulation, regulation always comes after. Okay, nobody puts a regulation in place saying that, well, in 5 years we're going to have cryptocurrency, right? So things happen, and because things happen, then we regulate, right? Mm-hmm. The issue here is just that things happened in 2009, and we're now at 2025, and we don't have clear regulation on something that is, a multi-trillion, billion, zillion-dollar potential business here that everyone is basically involved in one way or another, and there's still yet no regulation, right? So that's really the issue.
Let me ask you this, Chris. You just said 2009. Let's look back in 2009. Global recession was happening. Real estate markets crashed. I mean, people were it's a mess. 2025, we just lost $4 trillion in value in the stock exchange, and now we're at this huge change of what's happening. What advice do you give to people when they think about should I really be looking at this currency as a vehicle going forward to park my money?
Grant, it's really interesting because, look, I love predicting the future because when I do, I'm at least right today, right?
That's an honest statement.
So a lot of these things are looking forward, looking at the future and how things can be impacted and what we will do with it. And you brought up CARICOM, and CARICOM to me is really interesting because it was a revolutionary program and agreement at the time. It's over 30 years old, Grant. Okay,
Wow.
it's over 30 years old,
Yeah.
and there was no way to understand the internet even in the CARICOM agreement, right? So there's actually things in the CARICOM agreement that have dampened and hurt innovation, have not been able to keep up with changes that have gone on. And I can't for the life of me understand why every country in the Caribbean, that the heads of every one of those governments is not saying we need to do CARICOM 2 and we need to do it yesterday. I can't understand that.
Chris, we're going to take a break right quick. We got to keep that thought going. CARICOM 2.0. I think it's time. Let's do that. I think we're going to go to break.
Are we taking a break? Yeah.
Yep.
In today's fast-paced financial landscape, access to capital is the key to success. At the heart of this revolution is Case Capital Markets, powered by SETI Case. Here, innovation and investment converge, creating a dynamic environment where businesses can thrive and reach new heights. Introducing Grant McGaw, the senior advisor at Case Capital Markets. Grant is a visionary leader, dedicated to connecting businesses with institutional capital and strategic funding. His expertise opens doors to game-changing investment opportunities, making him an invaluable partner for companies looking to scale and succeed in the competitive world of finance. With an impressive 25 years in technology, 9 years in healthcare, and 6 years in investment banking, Grant McGaw has a proven track record. He has successfully closed over $500 million in high-value transactions, seamlessly bridging technology, healthcare, and infrastructure with innovative financial solutions. His experience is a testament to his ability to drive success. Case Capital Markets offers businesses direct access to over 32,000 venture capital firms, private equity funds, family offices, and institutional investors. This network empowers mid-market companies with under $100 million in revenue to scale beyond their limits, unlocking unprecedented growth potential. Debt, equity, growth capital, public offerings. These are the building blocks of the future of capital access. Whether you're scaling a business, seeking investment, or exploring market expansion, Grant McGaw is your trusted partner. Together, you can unlock capital and create long-term financial success. The future belongs to those who take action. Are you ready to elevate your business?
Today we're taking a little vacation on the west end of St. Croix, visiting a seaside restaurant called the Beachside Cafe here at Sandcastles on the Beach.
The atmosphere is just wonderful.
You just feel very welcome when you're here.
Hi! I'd like to introduce Chris and Ted, who are the owners of Beachside Cafe and also Sandcastles on the Beach. This is amazing!
Thank you.
Sandcastle on the Beach is quiet and friendly, relaxing.
I often entertain guests, and this is the one place I always try to bring people.
Tell us a little bit about the hotel.
Well, the hotel is a 25-room hotel. We have 10 different room types within that. We also have, of course, our greatest asset, the ocean out there, which our side of the island is very calm typically. So it's the best swimming beach and also great for snorkeling.
And just walking and doing.
Welcome to our TV network, your ultimate destination for all things exciting and essential. From mouth-watering food to the latest in fashion, health, education, music, movies, and news, plus thrilling sports and breathtaking travel. Our TV network brings it all to you. Tune in today and experience the best of every world, all in one place, RTV.network.
All right, we are back. We are back, Chris. You were on a line of thought that's bringing us up to CARICOM 2.0, and the reason why we really need to kickstart this because it's important because this is a freight train that's coming through the financial markets that's not slowing down at all. Continue on your train of thought, please.
Well, Grant, first, again, CARICOM was a revolutionary agreement when it was originally put together and signed. And I think one of the things that was revolutionary about it is it actually got all the governments in the Caribbean to agree on something. And this historically has been a bit of a challenge. So, but again, we reached today, more than 30 years later, with no additions, no changes, but yet the world has had additions and has had changes that directly impact. So I think that there is a lot of things that are not considered in the agreement, especially when we talk about the internet and we talk about cryptocurrencies and these things. And it holds back, I think, now some of the development that can go on in the Caribbean, some of the alignments. We need to bring that back together again. And we need to be able to look at the Caribbean and say, it would be nice to have it as an economic zone where everybody works and cooperates. And I think that's a vision that can be a reality. But I think some of the things that hold that up, one is the multiple currencies that we have throughout the region, right? And I understand currency is also a very prideful issue. It's nationalistic. These are important things. But here's where crypto can come into play. We can tie all those currencies to one crypto coin that's a stable coin. So it means it's backed by a particular currency, say the US dollar. And now you can make all trading between inter-islands as well as the rest of the world very seamless, very simple, and very much a way to develop the whole region. And again, it wouldn't take the same kind of agreement from all the countries as if we wanted to, and as has been tried in the past, to have one currency similar to the euro, right? Now, the euro got agreement from everybody, and everybody, was fine. The Germans gave up the marks, the French gave up the francs, the Spanish gave up the peso, right? But we don't need to do something so dramatic in the Caribbean. What we need to do, and technology allows us to do today, would be to tie this to a stable coin and have that used as the medium for electronic payments throughout not only the region, but globally.
I think that's so important to have that kind of opportunity and uniformity. So whether you're in, say, Jamaica, or you're in the DR, or you're down in Turks and Caicos, or you're, Barbados, and that currency translates wherever you're at, and then, any given day, that's what that's going to look like. I think that opens up the markets. Here's my question. As I just, did taxes and that type of thing, and, I'm in the, American dollar market, and as you do your profit and loss statements, they're in dollars and cents. I don't think there's no crypto part of that, unless it's a separate form that you fill out. Does that now lead to, let's say if I took all my assets and now I'm top heavy, I'm 90%, crypto, 10% what you would call regular American US dollar. How does that change the taxation? And you kind of brought that up now. I mean, is there room now, for a lot of either illicit activity or just, plain old ignorance in the world? Because if the tax code is kind of like, I'm not sure, and I can't really track all this stuff. I mean, there's kind of a wild, wild west going on.
Well, Grant, let me say first is that neither of us are giving out tax advice. Neither of us are giving out financial advice. We're giving out our opinions, okay? And we're trying to give a little more information to people to make their own decisions, right? So, the situation, remember again how the IRS works when it comes to a commodity, is that you actually don't pay the capital gains tax unless you realize that profit. So if you have a share of IBM and you bought it at $100 and it goes up to 110, okay, it's only when you sell it and realize the $110 that you pay the tax on the $10 in capital gains, right? Same with crypto, right? So as long as you're holding your crypto, it doesn't matter how much it goes up, right? It only matters when you actually cash it in and what was the profit that you potentially realized, right? And this was an interesting thing about the presidential race that we had in the U.S. last year, is that one of the things that were put forward by the other party was to actually tax you on what they called unrealized profits, right? So in other words, if you bought, and we'll use IBM again as an example, if you bought $100 worth of IBM, the end of the year it reaches 110, right? Then on January 1st, you owe capital gains tax on that $10. It doesn't matter if January 2nd, IBM drops to $90. Okay, so just think of what the impact of that could be across the board for people. But let's come back to some of the more important things you said, which is really related to the Caribbean and what we need to do here to make things like the CASE initiative really be able to work out. So to me, the holdup on a number of fronts is that we have multiple currencies and how do you convert them? We've had the de-risking, banks pulling out, so it makes it even more difficult to realize US dollars or euros or pounds, for instance, right? We can look at that scenario the same as in crypto. So if we had the proper banking relationships that used to be in the Caribbean, right, then it was very easy to be able to take your Jamaican dollar and turn it into a US dollar, as long as central bank had the funds to be able to do that. That's a different issue, right?
Yeah.
Okay. So you could do that into dollars or into euros. What we're suggesting today is that you would do that instead of dollars, euros, or pounds, or yen even, you would do that into a stable coin. And that stable coin, then you would convert the various currencies in the Caribbean to the stable coin, and then the stable coin would be used for payment and would be converted to the currency of choice. You're buying from in pounds, you're buying in renminbi, you're buying in yen, whatever, it would change. So it's very much the same framework that we've always had and always used, right? So this is one of the things that's really nice about doing this kind of thing, is that we can rely on some of the old tried true frameworks with a little new twist.
And the reason for doing this, the big thing, like why do we want to do this? Why digital currency as opposed to, or actually cryptocurrency as opposed to what we're even doing today, some forms of digital currency? It's almost like today, I remember this, that, getting cash, using cash is almost a burden today. It's like, wow, I got to, reach in my wallet and pull out, dollar bills. It's just so hard. I can easily push a button so many different ways to transfer money. And the banks have been doing this for a number of years. They call it a wire transfer. But now you've got, there's all kinds of different apps out there that you can utilize, whether it's a Venmo or a Cash App or a Zelle, and so many easy ways to do that. I don't even know Western Union if they're still in business. I think they're still in business, but wow, who needs to do that when you can easily transfer money? I'm saying that to say this: ease of use. Do you think if you go to this stable coin, the ease and transference of currencies is going to be much easier and traceable? I mean, you should be able to take out the illegal activity if it's on the blockchain. Do you see that as going forward as a much stable way of doing business?
Yeah, no, Grant, you made a number of really important points there. I mean, ease of use, of course, is paramount. The idea that we can have visibility into transactions because it's on the blockchain and be able to reduce the amount of illegal usage of currencies, I think is also a key aspect. You know, the ability to be able to use that again to move between various currencies is also, I think, an important point. You know, when we talk about all those things. But remember, currency in general, right? You know, the U.S. dollar is only based on trust in the U.S. government, right? It's really, there's no gold, there's no silver backing that up, right? And also, what's interesting is I was just reading at the end of last year, the Treasury report. According to the Treasury report, to make a U.S. $100 bill cost 57 cents. Okay. Now, I don't know what business in the world you have that kind of profit margin, right? It's just incredible when you think about that. But it's because of the demand. Look, 80% of global trade is done in the U.S. dollar. To me, it's too high a percentage. It gives the U.S. too much power when it comes to these things. And this is one of the reasons we're seeing, you know, the back and forth right now with the tariffs. And, you know, basically what I'm telling my people who I work with and everything is that, you know, you don't need to change your plan because this is going on. These are governmental tools, right? Mm-hmm. It's really not about the tariff and the U.S. government gaining money from that, right? Many countries depend on tariffs on U.S. products as a source of income, right? It's different. Right. This is about bringing people to the table and getting better deals that are more equitable on both sides, right? And we're seeing that happen. Now, you know, it's not nice to see that prices could increase, but, you know, where are we hearing a lot of that from, right? Well, look, I was just in Europe a couple of different weeks for a couple of different events. And in Europe, you know, they're crying, right? They're crying. But what they're saying is that, oh, the U.S. middle class is going to suffer, right? But here's the point, is in Europe today, the European middle class already pays more for everything than the American middle class. Mm-hmm. Gas is almost triple the price. Most food products, unless local, are double the price, right? And they're that way because they don't have the natural resources in a lot of cases. They have to ship a lot of things in that they have to, you know, buy from China, you know, and they don't see that. So they're saying that, again, to disturb the American middle class, because the European middle class is in really much more difficult position.
Hey, you know, Chris, you bring up a great point. We're going to end on this note, and we this is why you got to tune in week to week, because we can go on and on and on. And I'm going to thank you again for bringing so much knowledge about cryptocurrencies to people so they can really do their own due diligence. And to your point, we're not giving out, you know, specific financial advice or anything like that, just opinion. We're just observing what's going on in the playing field. So thanks again for being on the show.
Thanks, Grant.
Welcome to our TV network, your ultimate destination for all things exciting and essential. From mouth-watering food to the latest in fashion, health, education, music, movies, and news, plus thrilling sports and breathtaking travel. Our TV network brings it all to you. Tune in today and experience the best of every world, all in one place, RTV.network.